Hello guys, how is it going? It's Daniel Fix right here. So welcome every one of you on another price action video on the arc. So today we are going to be discussing about dynamic channel, which is what most of you guys actually call it trend lines, and you get it trend lines, maybe an uptrend and a downtrend. You get so we're going to be dealing with every single one of it today, and I'm going to be diving deeper into the price action aspects of it and what you need to understand as a price action trader when it comes to dynamic channel. So looking at this slope right here, because I call it a slope because the market is falling to the downside. If it's like, you can call it a slope if it's going to the upside. So we have a slope that is falling to the downside, which shows you the market is on a down trend. So let's start from this price level. The market is coming all the way to this price level. It gets to this price level, it creates a low. Mark that as your first touch. It creates this low and it has this run up to the downside and coming down here, going up, coming down one more time and breaking out. You get it? So there are key levels where I want you to mark out. Understand this range right here is showing you sell pressure already in the market. The market dropping below here, unable to break below this previous low, is showing you that this market is trying to go down. You get it? Because this has turned liquidity and the market coming all the way up here, unable to take out this high and coming one more time, unable to take out this same high that tried to take out this high. It has confirmed our down trend. You get it? And the market coming down to this price level, taking out both lows right here, you see, which is liquidity, creating a new low. It has shown you that this market is on a downtrend. So what you'll be watching after now is a breakout, a possible breakout out of this dynamic channel. That is all of these things you see here, all of this movement, then you get breakout. So now let's not dive deeper. Let's understand how we can make good trading decisions just by looking at this kind of market. So whenever the market is making a dynamic slope, a dynamic channel, I mean to say, you want to mark your first touch. Your first touch is going to be here. You want to focus on only four levels. Most traders are going is going to say it's supposed to be three. Yes, it's always supposed to be three, but for me, I don't mark, I don't see this equal highs as two as three. I mark one two as two, just two. This one two as just two. You get, but most people say it has to have three touches. Yes, it has to have three touches. You get, but it's going to make you miss the main deal. You get it? This is just an equal high, this is an equal low, and that is where double tops double bottom comes in this concept. You get it? So I want us to mark out double tops double bottom. This is a double bottom, this is a double top, this is a double bottom, this is a double top. Double tops, double bottoms are very, very important in every aspect of trading. Are you getting it? But just for us to understand what we're talking about, you want to get this one, two, two. That is one, two, one, two. Two touches at the up, two touches at the down. In a dynamic channel, in a trend line, it's in most cases is going to give you a double top in a downtrend dynamic channel. In most cases, it's going to give you a double bottom in a dynamic channel uptrend. You get it? And in the most cases, it's going to give you a fake out. It mostly gives you this fake out if it's going to be breaking out to the upside. Are you getting it? It gives you this fake out to the downside, which intrigues traders who like the ability to understand how the forex market moves. They will not think the market wants to break out because they see a full body candlestick. The next thing you will see is an up down close candlestick coming back inside the dynamic channel. So back to this price level, you can see that this market went to this downside, showing you immense sell pressure. That is looking at the momentum, the market has enough sell pressure. The market went up, creating one. The first touches, you can mark this as your one, this as your one. It has created an high, which is your lower high. The market came to this price level, unable to break below this price level. It has created a double bottom. This double bottom is a potential liquidity level. When I will be talking about price action, liquidity in price action, I will be explaining every single one of them for you guys. So you get a double bottom. right here. The market went up, unable to take out this high right here. It has created a new what? Lower high. But this lower high was not able to take out this one. Let's see, let's call it a new lower high. The market came back to it one more time, creating a double top. For it to have this in like enormous movement, this enough sell pressure you see here, this is sell pressure. Before the market can make this explosive movement, it gives you this double bottom, double top patterns. It gives you a price pattern for you in the market. This gives smart traders who understand how the market moves the ability or the opportunity to enter the market. So it creates this double bottom here, it creates this double top here. The market breaks below it with full body candlesticks. Let's just say you miss every single one of these movements. Now tell me, how can you take your trade and catch this massive buy to the upside? So since we have a key level here, we have a key level here, and we have a key level here, and the market has been able to grab liquidity by taking out this double bottom right here, then the new key level right now is this one, this liquidity that has been taken out, this recent, that last swing low right here. That is that last lower low right here. So the market comes to it at the first touch. It was not able to like keep pushing to the upside because this is what, this is a support, and support now turn resistance. Are you getting it? Resistance. And mind you, if the market keeps coming to a key level multiple times, 3 to 4 times, or just say 2 times, if the market comes to a price level 2 times, at the third one, the market might or must or will break out. So the market came to this price level the first touch. It was not able to keep pushing because this was a support level. Support on resistance, and the market pushed to the downside. It did not come to this price level. Are you getting it? This is where it plays traders. This is where how smart the forex market is. It did not come to this price level because there's always going to be another block there. The market tried one more time. Okay, maybe it came to a fair value gap, and it takes smart SMC traders in, and they'll be like, this is a fair value gap. They mark their fair value gap and they enter the market longs to the upside. It gets to this price level, was not able to break past this level, this high, this resistance. You see this support down resistance right here. Then you now have the second touch. The market falls one more time. It falls one more time, and it and this second touch now taps into that maybe a 5 minutes other block right there, and the market makes this explosive movement. In most cases, there's the breakout. You might not get that proper retest. Are you getting it? It might not get that proper retest. Sometimes the market might just choose to break out and keep going. The retest might have already happened inside the dynamic channel. So remember, this was a resistance, and the market came to this price level, this key level right here. This now has now turned resistance for here, for this price level. The market coming to this price level, tap at this resistance, that this resistance has now turned support and was able to break out. So this is for a dynamic channel that is going to the downside. Let's now take an example of a dynamic channel that's going to the upside in the second video.